Wouldn't be a great thing if you had to pay less of an insurance premium for your car if you followed all of the rules and if you drove like you were meant to drive without breaking signals, without parking in the wrong spot, without doing any of the various infractions that can get you into trouble and can cause accidents? Well, it turns out that the insurance regulator is working on something or has come out with regulations that will allow insurance companies to come out with policies that will do just that. We're going to talk about the three major changes that the insurance regulator has come out with our next guest. We've got Ashwini Dubey, who is the head of motor insurance renewals at policybazaar.com. Thank you so much, Ashwini, for taking the time, and good evening to you. Let's talk about these one by one. There is pay as you drive, there is pay how you drive, and there is a floater policy. The first one, let's talk about pay as you drive. How does that work?
So thank you, Alex, first of all, for the warm welcome. It's nice to talk to you again. Pay as you drive, as the name suggests, it is a cover basic. It is an insurance cover which is based on the number of kilometers or the distance that you drive the vehicle. So, for example, a lot of people now are in positions where they're working from home. They're not driving their cars much. So their cars are being driven much less than what they were pre-COVID. Secondly, a lot of people have second cars, which generally are not driven as much as their primary cars. So what the regulator has basically said is that the insurers are now free to actually start calculating premium for these cars basis the number of kilometers that the car is driven, rather than a flat rate for any and every vehicle, irrespective of how much they're actually driven in the market. So that's a basic definition of what pay as you drive is. It's a fairly popular concept in US, Europe, etc. And it's a welcome move that it has now come to India, where some companies have already tried it in the past. However, now with this regulation, we are sure many more companies would like to jump on this as well.
So in this case and the others, would this be an add-on to a base policy? Would you have to pay for it, or would you have to opt for it? How will it work?
So basically, you would have to opt for it. So the basic policy would always be the third-party policy that a customer has. So a third-party option would always be the mandatory concept, which is mandatory by law for all vehicles. Over and above that, when you buy an own damage policy, when you buy a comprehensive cover, this would act as a rider, which would help a customer save on money, and which would help an insurer actually give lesser premium for the number of kilometers driven. So let me give you an example. There are multiple ways companies can do it. Some companies, how they do it is they actually give you a prepaid option. So for example, you buy a basic third-party plan and you pay a certain amount of money for, say, 1,000 kilometers, right? And your risk of the vehicle, risk of damage to the vehicle is covered only for 1,000 kilometers. Once you've driven the 1,000 kilometers, to drive beyond that, then you buy something like a top up, right? And you top up your kilometers by another 1,000 kilometers or whatever distance that you want to top it up for, and then your risk is again covered for that particular period. So this actually keeps on going as a top up basis the number of kilometers that you want to drive. That is one part of how you can do it. Other companies, how they're doing it is they basically charge a customer. They could actually charge a customer a basic overall premium, including third party and own damage, and they provide the customer an app where the customer has to use that app, and the customer can actually switch on and switch off the premium, the comprehensive coverage or the own damage coverage, depending on when the car is actually being driven. So say for example, a person has opted for this cover. When they start driving, they can switch on the coverage, and the policy will cover the number of kilometers that the vehicle is being driven. And then at another point, they can actually switch it off. After which, the basic third-party component and maybe a theft component could actually be covered for it. And whatever benefits are accrued during the time, those can be taken up at the time of renewal of the policy.
This is actually very interesting, and it opens the door, I think, for a lot of possible mix and match options. And this is only the first option that we're talking about. We're essentially talking about the pay as you drive. And this is something I'm sure that a lot of you have experienced as well. What Ashwini was pointing out, over the course of the pandemic, you had very little use for your car. And in fact, even now, with a lot of companies having a flexible working scenario where you're working for a few days in the week and the rest of the time your car is lying at home, you would essentially benefit from something like this. But, you know, so you've described a couple of scenarios, but let's move to the next one, Ashwini, which is pay how you drive. And this, I think, is a very interesting concept because we're moving to a time where in metro cities, a lot of your traffic infractions are now digitally communicated to you, right? So if you jump a signal, for example, you get a challan on your mobile phone and you get notified by the traffic authority. It's not something that you get caught for by the police and you don't have to pay immediately. So things are much easier that way. How does this one work?
Right. So pay how you drive is a cover that is, so as pay as you drive is basis the number of kilometers or how much you are driving. Pay how you drive is basically the driver behavior. So if there are people drive in any which way they choose to, right? There are some people who try to drive a little more safely. Some people who may not be driving as safely as the insurance companies or they themselves should. So this cover actually this type of insurance policy basically calculates the premium basis your driving behavior. So whether you're driving properly, whether there are any harsh accelerations, there's any harsh braking, any harsh cornering, or as you said, they could in time actually also start covering traffic violations as well, overspeeding, jumping red lines, crossing lanes unsafely. So those things would also start being covered. So that this is a fairly new thing. As per my knowledge, I think only one company has actually tried to do this in a sandbox a little while ago. So this is a little more complicated. Here to look at you would actually have to look at the driving behavior of the customer. So the driving behavior of the customer is actually looked at, an algorithm is run at the back end, and then a premium factor is decided. This is generally done by using a telematics device, popularly known as a GPS device. So GPS device is generally installed in a car, and then that helps the insurance company in getting to know the driving behavior of the customer. And basis that driving behavior, then they can choose to jack up the premium or provide a lower premium. How this will actually work is something we're still in conversations with insurance companies to see how they can get it to work. However, this is again a very interesting concept, and it benefits both ways. It benefits people who drive safely, that they would have to actually pay a lower premium, and it benefits insurance companies to actually identify areas where they can actually minimize their risk, or they can control their risk a little bit more.
I think there's going to be a bit of a challenge. I foresee a bit of a challenge. You correct me if I'm wrong, Ashwini, because a telematics device, and I remember, if I'm not mistaken, a few years back, the health insurance industry tried to do this, through the use of a health tracker, to say that if you have a certain number of steps, if you take care of your diet, etc., your health premiums will go down. So essentially, this is an incentive from a company that launches such a product for you to drive better. But on the flip side, there's an issue in terms of privacy, because the company will then have access to information about where you drive, the places that you go, and that may be a bit of an issue, the sharing of that information. Do you foresee that as a problem?
Yeah, yes, to an extent, yes, you're right. There would be certain concerns, especially privacy is the biggest concern, where not just, maybe the insurance company can come up with something to take care of the data. But again, you have to keep that data private, that a third party does not get access to it, because that is, privacy is one of the most important things that is anyways being discussed overall right now. Plus, customer data privacy is again something that insurance companies take very, very seriously. So yes, I agree. Some challenge would be there on that part. However, I'm sure, see, since the IDA has actually brought out this guideline and they said that since with technological developments, things are moving ahead. So probably some more innovative things can be brought up in this field, in this particular field. Let's see how it works. We're still, as I said, we're still in discussion with a lot of insurance companies to see what all products can be brought in, what kinds of products can be brought in. The idea has actually opened the floodgates now for more innovation in the industry. So we're very, very bullish and very confident that more technological advancement will take place and some unique product will actually come out over the next few months.
And we're all watching with bated breath as well, especially those that are looking to buy a new car or are very close to renewing their policy. They'll be watching very closely. But third aspect that the regulator talked about is a floater policy, which is actually quite interesting, wouldn't you say, Ashwini? And it has to do, I think, with those that own more than one car or more than one vehicle.
Yes. So the concept comes from a family floater plan that is there in a health insurance anyways, right? And a lot of insurance companies, a lot of insurance companies even now have a second car kind of a plan where if you already have one car which is insured with the company and you insure a second car with the company, you get a little bit more of a discount. So that already exists. But this as they said, this floater can be extended to two-wheelers as well, to other cars as well. Car ownership, multiple car ownership has increased by a lot over the past few years. And definitely owning a car and a two-wheeler, of course, that ownership has also increased multifold over the past many years. So that's a much more interesting concept. We foresee a lot many customers actually wanting to opt for a similar cover. There are a few challenges that need to be stitched up to take that into to the customer directly to for them to be able to use it. However, the concept is actually very, very good and will help in multiple ways. So the first thing, of course, is that the customer will enjoy benefit of a lower premium. The second thing that IRDA is actually, I think, very smartly doing is increasing the insurance coverage for customers and for assets throughout the country. So even now, it becomes cheaper if I'm already buying a car policy. It becomes cheaper for me to actually extend that to my two-wheeler or extend it to my other car, where customers might have actually hesitated in even buying an insurance policy for their second car or two-wheeler, which actually has a very low running. Now it becomes a much lower cost deal to actually extend this insurance to a second car, and this will surely, in our opinion, help in increasing the penetration of insurance to multiple assets, where we all know that insurance penetration in India is still not at the level that we would like it to be. So this is one product that going forward should help us increase the penetration of insurance as well.
Ashwini, is there really a challenge in terms of renewal of policy? Because motor insurance, of course, is compulsory. But are there instances where people hesitate? Like you said, are there numerous examples of people just stopping renewing a policy if they're not using their vehicle?
It could happen. It could happen sometimes sometimes. Largely, what people choose to do after a certain age is they actually choose to opt for a third-party only policy. When your car gets older, when your two-wheeler gets older, your car is maybe now 8, 9, 10 years old, and you're driving it it's a second car, you're not driving it too much. So you actually end up choosing only a third-party policy for it. And primary vehicle that you use, I mean, just let's say sticking to the example of a second car. So if the primary vehicle you use is your daily use vehicle, the second car is generally at home, being driven very less. So you so sometimes customers opt to actually go for only a third-party cover. This extension kind of a cover would extend could actually help in extending a comprehensive cover to that second car as well. So a third-party cover, for example, does not cover theft of the car, right? So this comprehensive policy extended to a second car would actually also help the customer insure their second car in terms of a theft or in terms of any other such event. So yes, so people do renew policies. However, they do tend to move towards third-party policies as the vehicles start getting older. However, this can actually help them protect themselves financially. A third-party policy does not cover your damage to your own vehicle. this policy would actually help you cover damages to your own vehicle as well.
Fair point. And, I think clearly this is a big move in the motor insurance space. And it, as you said, opens the floodgates for a lot of innovation. And let's wait and watch to see what comes out. Thank you so much, Ashwini, for taking the time. Always a pleasure speaking with you.
Thank you, Alex. Thank you very much.